Welcome back to the Malaysia Money Matters show. It's the 9th of April, 25, and as always, we're diving right in to what's shaping the Malaysian economy and your money. Think of it as your shortcut to understanding the key developments. We've got a lot happening locally, with company news globally, with escalating trade tensions, and politically here in Malaysia. As we navigate these challenges,
Right.
let's get right to it, starting with what's happening with Malaysian companies.
Yeah, what stands out to me immediately is that it's a bit of a mixed bag. Some companies are doing really well, others are facing some pretty serious headwinds.
Okay, so let's start with the positive then. Aeon Credit has announced its best profit in 11 quarters, a 10.1% jump in net profit for Q4, reaching 130.97 million ringgit. What's the core insight for us here?
Well, it definitely suggests that consumer spending is strong and that their strategies for managing their loan portfolio are working. They've also been successful at recovering bad debts, and they've even increased their dividends slightly, which all points to a certain degree of financial confidence.
Okay, so it sounds good so far, but they did mention a slight rise in their non-performing loan ratio.
Oh.
And for those who might not know, that's the percentage of borrowers who are struggling to repay.
Right.
And they've also seen increased losses from Aeon Bank.
Yeah.
Should we be concerned about those two things?
Well, yeah, they're definitely indicators to watch. A rising non-performing loan ratio can be an early sign of potential stress in the economy, affecting borrowers' ability to repay their debts. As for Aeon Bank, well, digital banks often take time to become profitable, so these initial losses aren't necessarily alarming, but they do need to be monitored for long-term sustainability.
Okay, fair enough. Let's move on to another company making headlines, MSB Global Group, an auto parts distributor. Saw its IPO on the ACE market.
Okay.
And again, for those who might not know, that's a market. For smaller growth-focused companies, it was oversubscribed by a huge 6.46 times for the public portion. What does that tell us?
I mean, that level of oversubscription really shows that investors are very confident in their business model and future prospects, especially in the auto parts sector. They plan to use the 41.4 million ringgit raised for expansion, including new machinery and even an EV charger, which signals they're thinking ahead and looking to capitalize on industry trends. And it's also good to see that some of the funds will be used to repay debt, which strengthens their financial health.
Absolutely. And their listing is on April 15th.
Okay.
So keep an eye out for that one. Now, another significant development is that CGS International Securities Malaysia has launched fractional share trading on Bursa Malaysia.
Interesting.
You can now invest in the top 30 companies with as little as 1 ringgit.
Wow.
This could really change things. For new investors, couldn't it?
Absolutely. This is huge. It dramatically lowers the barrier to entry into the stock market for many people who thought
That owning shares in big companies was out of reach, this provides an accessible starting point with a minimal initial investment.
that 1 ringgit figure is really powerful. It's a symbol of accessibility.
Right, so these fractional shares are held under nominee accounts, not a direct CDS account. Can you briefly explain the difference?
Sure. And what it means for investors. So with a direct CDS account, you have legal ownership of the shares, which are held under your name. And you have voting rights at company meetings. With a nominee account, the brokerage firm is the legal holder of the shares, and you're the beneficial owner. You still get your dividends and proceeds from any share sales, but you typically don't have direct voting rights.
Gotcha. So it's a trade-off for the ease of fractional ownership.
Exactly.
And they're running a promotional period with no brokerage fees for buying and a small 2 ringgit 50-cent fee for selling.
That's great. It's a really nice incentive for new investors. It encourages participation and allows them to learn without a significant initial outlay. And starting with the largest companies on the KLCI also offers exposure to established and relatively stable businesses.
Makes sense. Okay, let's switch gears a bit and talk about infrastructure.
Okay.
ECRL
For
project.
the East Coast Rail Link.
Yes, that's right. It's progressing well, with 38 tunnels now excavated, 2 months ahead of schedule.
Wow, that's a big achievement. It shows that the project management is quite efficient. Phase 1 is expected to be completed by December 26, with full operations starting in January 28. And this is going to be a major boost to connectivity between the East Coast and Selangor, significantly reducing travel time. And this improved infrastructure will really stimulate economic activity and create new opportunities in those regions.
Absolutely. Now on a smaller scale, Fajarbaru Builder Group has secured a 63.7 million ringgit construction contract in Klang. And contracts like this provide good earnings visibility, don't they?
Yeah, exactly. A healthy order book means a clear pipeline, of future projects and revenue. For Fajarbaru, this brings their total order book to 1.14 billion ringgit, providing earnings visibility until 2027.
Okay, and what about Matrix Concepts Holdings? Their major shareholders are injecting their Selangor property business into the company in a deal worth 77.9 million ringgit.
That's interesting.
What's the strategic rationale behind that?
Well, it seems like a strategic expansion. To establish a presence in the Selangor property market, they already have a strong footprint in other states, so this diversifies their geographical reach. And importantly, the acquired companies are already profitable, so this could potentially boost their overall financial performance.
And then we have Yong. They formed a joint venture to develop service suites in Melaka, a project expected to generate 28 million ringgit for them.
Joint ventures can be a really effective way to share risks and rewards of development projects. For Yong, this JV allows them to tap into the Melaka market and generate revenue, while their partner, Tag Hill Holdings, manages the development itself.
Right, so it kind of streamlines their operational involvement.
Yeah, exactly.
Not all news is positive, though. Panasonic Manufacturing Malaysia anticipates a 3% annual revenue loss due to a gas supply disruption. This really highlights how vulnerable manufacturing can be to external factors.
Yeah, it does. Unexpected disruptions can have a huge impact on production and revenue. Panasonic does expect the long-term impact to be minimal because they have contingency plans, but it shows just how important it is to have resilient supply chains and good operational risk management.
Okay, moving on to the logistics sector. We have some good news for Swift Haulage. MIDF Research has upgraded its call to buy after their share price hit a record low.
Interesting.
Their focus on sustainable logistics, including adding electric trucks, seems to be driving this positive outlook.
Yeah, it looks like the analysts are seeing a potential turnaround here. Investing in electric vehicles and sustainable practices is a smart move. It aligns with global trends and could give them a real competitive advantage if those investments lead to improved efficiency and new business opportunities.
Yeah.
As MIDF Research expects, then we could definitely see a recovery in their share price.
Now, PHB has declared an interim income distribution for Amana Hartana Bumiputera.
Oh, that's good news. For their unit holders. A distribution of 2.5 sen per unit provides a tangible return for investors. And it's worth noting that these distributions are net of zakat and tax exempt for eligible investors.
Right, good point. Finally, in local news, MBSB Bank has withdrawn its lawsuit against Perwira Awan, a unit of K&M Group, and has expressed support for K&M's restructuring efforts.
That's significant, especially for a company undergoing financial restructuring. Having the support of a key creditor like MBSB Bank is crucial. It's a positive sign for K&M's chances of recovery, even though their share price remains low.
Okay, so you covered a lot of ground on the local front. Now let's zoom out a bit and look at the international picture.
Okay.
The U.S.-China trade tensions are escalating. China has vowed to retaliate against the latest U.S. tariff threats, and there's talk of even higher tariffs from both sides.
This is worrying. It raises the risk of a prolonged and damaging trade war. When big economies like the U.S. and China impose tariffs on each other's goods, it disrupts global supply chains, it increases costs for businesses and consumers, and it creates a climate of uncertainty that can really hurt global growth.
Now, in what seems like a response to these tensions, China, Japan, and South Korea held a trilateral meeting in Kuala Lumpur.
Interesting.
Could this be a sign of a united front forming?
Well, these three Asian economies are heavily reliant on trade, so they're definitely concerned about the negative impacts of these tariffs. Their discussions about coordinating a response and strengthening regional trade ties suggest they recognize the need to work together to mitigate the risks of this U.S.-China trade conflict.
And the European Central Bank,
the ECB,
is facing pressure to cut interest rates faster due to the global market turmoil caused by these trade tensions.
Right.
Can you explain why that is?
Well, there's a growing concern that the trade war could slow down global demand and potentially trigger a recession in Europe. When that happens, central banks often lower interest rates to try and stimulate economic activity by making borrowing cheaper. So the fact that markets are anticipating quicker rate cuts from the ECB reflects the growing worry about the economic fallout.
Goldman Sachs has issued some pretty stark warnings as well.
Yeah, I saw that.
They say that oil prices could fall below $40 a barrel under extreme conditions, linked to a global slowdown and changes in OPEC plus production.
That would be a huge drop and would have serious implications for energy markets.
They've also become more bearish on oil and gas stocks and are warning of a potential bear market for U.S. stocks. BlackRock has also downgraded U.S. equities.
These are some pretty serious warnings from some big players in finance.
Yeah, these warnings highlight just how serious the economic consequences could be if this trade war continues to escalate. Now, in response to the tariffs, Indonesia is planning to adjust its crude palm oil export tax.
That makes sense. It's a way to help their exporters cope with the impact of those U.S. tariffs. They're basically trying to absorb some of the added cost so they can maintain their market share.
And Micron Technology, a major memory chip maker, is planning to impose a tariff-related surcharge.
That's interesting. Considering semiconductors themselves aren't directly targeted.
How can tariffs on other goods affect them?
Well, it all comes down to global supply chains. Even if semiconductors are exempt, tariffs on related components, like memory modules and SSDs, increase Micron's costs. So they're passing those costs on to customers through
It
surcharges.
seems like a common way for companies to manage the financial impact of these tariffs.
Right.
Singapore is also taking this very seriously. They've set up a task force to address the economic uncertainties, and their prime minister has even warned that their 2025 GDP growth forecast might be lowered.
Yeah, they're a major trading hub, so their economy is very vulnerable to these kinds of disruptions.
The potential for a prolonged trade war is also putting a spotlight on Asia's trading halt mechanisms, with some markets already experiencing trading halts due to volatility.
Right.
What does that tell us?
Well, trading halts are designed to pause trading during extreme price swings to let things stabilize. So the fact that they're being triggered suggests there's a lot of uncertainty and anxiety among investors about the potential fallout from the trade war.
Adding to the tension, the U.S. has called China's retaliation a big mistake,
Yeah.
and the Treasury Secretary has said that they could take further action.
It doesn't sound like de-escalation is on the horizon.
No.
Not really. The U.S. seems to be standing firm on its tariff policies and is prepared to escalate further if they feel it's necessary.
Now, the European Union is in a tricky spot. They're considering counter tariffs, but they're also seeking a negotiated solution.
Yeah, they want to protect their industries. But they also recognize how damaging a full-blown trade war would be, so they're trying to walk a fine line.
And then you have Vietnam and Indonesia seeking adjustments and concessions related to the U.S. tariffs.
Makes sense, they're trying to negotiate to get better terms or exemptions, which just shows how these tariffs are affecting different countries in different ways.
So a very complex global economic picture. But let's bring it back home and see how Malaysia is responding politically to these U.S. tariffs. Prime Minister Anwar Ibrahim has emphasized strengthening trade within ASEAN and developing border areas to boost economic activity.
That's a good approach. Prioritizing regional ties and domestic economic development makes a lot of sense. Especially in the face of all this global uncertainty, it creates new growth opportunities and reduces reliance on external markets.
And Malaysia, as the current chair of ASEAN, is taking the lead in coordinating a unified regional response.
Right.
A special ASEAN Economic Ministers meeting is scheduled for Thursday to discuss this.
This is a significant diplomatic effort. Having ASEAN present a united front will carry a lot of weight. So Malaysia's leadership here is crucial.
They're going to focus on two main things. One is assessing the reciprocity of the U.S. tariffs, and the other is finding ways to enhance economic resilience across ASEAN through collective action back home. The government has activated the National Geoeconomic Command Center to coordinate our domestic response.
Oh, okay. That shows that they're taking the potential impact of these trade tensions very seriously. They're putting in place a centralized system to monitor the situation, analyze the risks, and coordinate a response.
Now, Malaysian exporters aren't just sitting back. They're exploring different strategies to stay competitive,
Such as?
potentially relocating some operations to the U.S., improving efficiency, diversifying their exports, and revising contracts.
It makes sense. They have to adapt to this new reality.
The Federation of Malaysian Manufacturers,
The FMM.
yes, has two main recommendations.
Yeah.
First, they're urging the government
Right.
to strengthen engagement with the U.S., and second, they're advising against any new taxes in the current economic climate.
Those are both sensible recommendations, especially for the manufacturing sector.
Now, there was a slight dip in Malaysia's forex reserves at the end of March.
Is that a concern?
Not really. The level is still considered healthy, more than enough to finance imports, and a good buffer against short-term external debt. Finally, the chairman of Bursa Malaysia highlighted the importance of transition finance.
Right. So looking at the long-term picture here.
Yes, exactly. It's important to help Malaysia's high-emission industries move towards a low-carbon economy.
Yes. Transition finance will be essential in supporting industries. As they invest in cleaner technologies, it's a significant undertaking for ASEAN.
So as you can see, there's a lot to consider today, from Aeon Credit's strong performance to the exciting potential of fractional share trading and Malaysia's proactive role in addressing global trade challenges.
It's all connected. Local company performance is being influenced by global trends, and Malaysia's policy responses are shaped by both domestic needs and international pressures.
For me, the most exciting news is definitely the launch of fractional share trading.
I agree. It's a game changer.
The idea that more Malaysians, including younger investors, can now participate in the stock market with just RM1 is amazing. It has the potential to democratize investing and build greater financial literacy.
What stands out to you? Well, I think the introduction of fractional shares is a big deal, but also Malaysia's leadership within ASEAN in addressing the global trade challenges is really significant. It could have far-reaching implications for the region's economic stability and its future.
We encourage you to delve deeper into these stories and think about how they might affect your own financial decisions. What resonates most with you from today's deep dive? And if you want to stay informed and get more insights into the Malaysian economy, make sure to subscribe to the Malaysia Money Matters podcast. We'll be back soon with more updates and analysis. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.